Hello and welcome to another update video about the DXY. The DXY reacted to our resistance area this week. There are two scenarios that I'm mainly following, as you might know. If you watched the previous video, then you know about these two scenarios. I'm still watching for lower prices here overall, over the next few months and maybe even years, depending on how long it takes. I mean, it could be that we are really stuck in this sideways range here for a long time, that we're going to be stuck if we get this higher B wave. So let's talk about these two scenarios anyway. The first scenario, that's what I'm primarily following, but don't get me wrong, they are both likely. But we are going to talk about the relevant resistance levels. And my overall assumption is that we are here in an ABC structure, A, B, C. So that's the base case, okay? And there are two scenarios within this which we can follow, and they both have different relevant resistances. So this first scenario assumes that the A wave happened, the B wave happened, and we're now in a C wave in an ending diagonal. This is not going to be an easy ride to the downside. By the way, I'm looking for the low $90 region eventually, for this C wave here. Maybe next time we can also look at the bigger picture. Let me know if you're interested in that, so we can take a look at the higher level wave count for the DXY. But yeah, A wave down, B wave up, and the C wave here to the downside currently unfolding. If it's an ending diagonal, then we're dealing with corrective waves in the subwave structures. So also here the wave 1 would be an A, B, C, or maybe even a WXY. Let me think if there's a different way of solving this. A wave, B, yeah, it's probably the WXY. This looks too, but it doesn't matter. The point I want to make here is that the subwaves would be corrective waves, which makes everything here very, very difficult, because B waves are some of the most difficult waves around across asset classes, and in every subwave here you will have a B wave. So it's not going to be an easy ride lower and not an easy grind. And you need to understand that an ending diagonal is not as steep, so it's going to be mainly sideways action, very, very choppy whipsaw price action. In this scenario, price should not exceed $104.50. We have structural resistance here, and this is the 78.6 retracement level. If price gets above that level, then I would argue we are in the other scenario, in the second scenario I'm observing. But you need to understand that here in this scenario, we have resistance at 102.70, 103.47, and 104.54. Again, plus minus a few cents. And if we get a break below the wave 1 low at 99.60, I think we have confirmation that we are in the third wave down. But there is at the moment no evidence that this wave 2 has topped. Okay, so this is still going higher short term. You can add a trend line, it's very well defined, 3 touch points here. And as soon as we break below the trend line, it could be an early indication that the third wave has started. In the second scenario, and that's also not unlikely, it's actually a fairly likely scenario, we're watching for a higher B wave in a flat structure. So that would assume that the actual B wave consists of an A wave, a B wave which unfolds or which did overshoot to the downside, and now a C wave higher. A wave, B wave, C wave. Let me think if that's correct. Yeah, that's at least one way of looking at it, because this B wave, I mean, normally in this is a so-called flat structure. Normally you don't want in a flat structure the B wave to exceed the 1.38 fib retracement of the A wave. And you can see this was well within the limits. That would have been 98.88. So that's all okay. From that point of view, this is a scenario that I'm also observing. Now, if we get a high B wave, or at least not a high B wave, but a higher B wave than where we had it, what would be resistance? Resistance would be, well, it would likely start at, let me think, is that correct? This is the A wave, yeah, so A, B, yeah. So we'd be watching all the way up to 111.76. But this scenario is only getting likely if we, or likelier, if we get above 104.54, because until then it could just be a wave 2. Above the 104.54 level, we have to assume we are in a higher B wave. Targeting, first of all, 106.13, 107.78, 109.42, and then 111. But we need to be watching, do we see reactions to each of these resistance levels? Now we can make that, we can calculate that a little bit more precisely by using the Fibonacci extension levels as well. And here you can actually see there is the 1.618 extension level, which is showing Fibonacci confluence around $107.72. So I would normally not look for anything higher than that, because that's the 1.618 extension level. In a flat structure, a very likely target. It can go higher, yeah, but normally this is a very reasonable level to look at. Yeah, and that's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.